And welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com, ZINNIA wealth.com. If it's time to talk about your retirement, let's get that conversation going. Give us a call, 833-368-3680. All right, what are people asking right now? According to a new study, here are the 4 things people want to know when they walk through the door of a financial advisor. Am I protected from a downturn? Number 2, what do I need to do to outpace inflation? Number 3, am I going to meet my goals? And number 4, how do I preserve and pass on what I have built? It's kind of going along with the list that we already kind of talked about here today, Sharice. To give people the green light for retirement, you gave us that list. This is kind of the same kind of thing. This is what people are looking for.
They are. And, we have a great way to show this. We had rejiggered some old school software that made life simple at the Office of Zinnia Wealth Management for all the advisors in the team and even for the client. So we wanted something so simple that they can understand it. We could build it out. We can change it within seconds. We don't have to use Excel, etc. And this software, we just pull up on the big screen. We show you, okay, here's your Social Security income. Here's your pension income. Here's your real estate income. If you have some of that real estate income, here's your 6 buckets. And we're going to pull from these buckets here and then these buckets here. But then if the market bounces around, we're going to go here. And we want to also talk about inflation. Every plan has to have an inflation adjustable income built in. So every year you're going to watch your income going up to keep up with inflation. And then we start the plan very pessimistically. We're not going to show you what we've done in returns. I'm going to be very pessimistic. I'm like, if this is what happens, I'm really just a shoddy, really bad advisor out there. Hey, it's not so bad. You still win the game, or do you not win the game, right? And then we'll show you the returns we've had and say, hey, if we do this like we've done over the last 5 years, this is what it could look like. Oh, okay. So it's nice for people to see like pessimistically what things look like instead of just going into like a big brokerage firm or one of those big banks and they're just like, yeah, put your money in here. We're going to next 10 years going to double your money. We're going to get this 7% every year. Like that's not a plan. That's a stock jock. I love you stock jocks. Don't worry. I do. But there's a place for a certain clientele, for a certain advisor. So you want to make sure you're working with a retirement advisor. During your accumulation phase, I'm all about the stock jock. Put your money in this, and there's closing your eyes and just keep going. Let's run the gamut, ups and downs all around. But then when you retire, you certainly have to pull out this software like we have, create an adjustable income every year for the next 30 years and for your spouse. We need to build out that, hey, am I going to pull an extra 20,000 or 40,000 or 100,000 for our travel? I have clients that do all 3 of those. I have one client that's like, yeah, well, I'm going to need another 100 grand this year because we want to just go fly first class, do it right, get that suite on the balcony on the cruise ship. And so we need to plug that into the plan and make sure you don't run out of money or hopefully make sure you don't run out of money, right? And if in the plan, it shows that you are running out of money, we're like, $100,000 extra in travel might be a bit much, but hey, we can maybe do 75 or whatever the number is. So we're just that voice of reasoning, doing the math for you, showing you what you can spend, what you can't spend based on what you save, based on your liabilities, based on your fixed incomes that are coming in. And we make it very easy to understand. And we want to really start it more pessimistically. And then we want to show what if a spouse passes away? Do we lose a pension? Because we definitely lose one Social Security. So do we need to plan for that? Do I need to build a contractual guarantee bucket so that when one spouse passes away, we click into this other pension plan that we can create? So we got to look at that. And then the legacy. Do we want to pass our money on? Do we want it to grow while we're living on it? Or you want to spend your last dollar on your last breath? So again, our written plans, people love them. The software is incredible. And if you haven't seen something like this, then, we're going to implore you to come in and see one of the advisors and we'll stress test that portfolio. And then we'll also bring in the income plan part of it.
Well, we would love to have the opportunity to have that conversation. And as I say, you will know more going out than you did going in. That's when we sit down and start this process and doing the math on your retirement, giving you all of this information. I think that you'll really start to see a clear picture of what it looks like to retire, and maybe we give you the green light, and maybe you go back to work and you go back with a whole new attitude, or you say, I'm putting the keys in this week. That's it. I'm done. 833-368-3680 is our number. 833-368-3680. Or online, zinniawealth.com.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.